Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, it has the 3rd of February 2023. Alright everyone, let's get into it. So another all-core devs call has been wrapped up here, and Tim Biko has his thread out as usual, and I'll of course link this in the YouTube description below. So what they covered, including the steps to the Shapella testnets. Now, Shapella is the mixture of the Shanghai and Capella code names given to both of the execution and consensus layers. I just refer to the upgrade as Shanghai, but technically it's Shapella. So if you hear people saying Shapella, that's what it's referencing. It's the same thing. It's just the different layers. Both the execution layer and consensus layer have the different upgrade names. I believe the execution layer is Capella and the consensus layer is Shanghai. I might be getting those mixed up though, but yeah, that's how it works, and that's combined makes Shapella. So just in case you didn't know that, there were lots of discussions around 4844 specs and the path to SSZing the execution layer. So you can read the thread for a full breakdown here on this. I did want to highlight one thing. I made a mistake, I believe, yesterday when I said that the Zhejiang testnet had already run through the Shapella transition. It had not. So what happened with the Zhejiang testnet is it was just spun up as a normal, I guess, current Ethereum mainnet. Current version of what we have on the Ethereum mainnet, and it hasn't gone through the Shapella or Shanghai transition yet. That will be happening on Tuesday at 3 p.m. UTC. So yeah, I mean, as I said, like the network itself was spun up correctly. It's all well and good. I believe there were only a few config issues with launching the network, but that was being looked into at time of Tim's thread. But generally, everything seems okay here. And on top of that, as I said, the actual transition, the Shanghai transition or the Shapella transition will be happening on Tuesday at 3 p.m. UTC. Now, obviously, the other exciting thing of this call, devs call, was more discussions around 4844 and specs. So the thing is, once a spec is kind of locked down, then the client teams can start building this out, and then we can start going through the whole process of getting it onto mainnet. But until obviously a spec is built out and frozen, so to speak, that can't really happen. I mean, it can happen in the sense of there can be dev nets, there can be things built in preparation for the spec being finalized, but in terms of getting the, I guess, longer-lived testnets or public testnets up and running, that definitely requires, I guess, like a spec that's either frozen or potentially as close to frozen as possible there. So you can read the thread for more information on that. And then the last thing was SSZing of the execution layer, which is a big topic. So this is quite technical. So SSZ, I mean, there's a post here that's linked in this thread from Vitalik, which is new, as of 7 days ago. It's quite new. Proposed trends and transaction SSZ refactoring for Cancun. Now, Cancun is the codename for the upgrade that is going to be, I believe, coming with EIP44, EIP4844 as part of the next upgrade after Shanghai. You can give this little document a read here, and you can also check out, as I said, Tim Biko's thread for more information about all of this. But anyway, I'll leave that thread for you guys to check out. Going to move on to the next thing now, which is a tweet from Ultrasound Money that I came across just before. So they've got a picture of the ultrasound barrier graph that's on their website, where they basically show the current ultrasound barrier, aka the gas fees or the Gwei number that needs to be met before we go deflationary. So currently it's 16.6 Gwei, and then it's showing kind of what this has looked like from Genesis, basically. Not Genesis, from when EIP 1559 went live, basically, as of 546 days ago. And you can see we spent most of our life in ultrasound territory as a network. Obviously, in 2021, the network fees were a lot higher and a lot more ETH was being burned towards the end of 2021, I should say, after 1559 went live there, and we've only spent a little bit of time under it. Now, the reason why the Ultrasound Money account has posted this graph is because they said a few things here. They said the Ethereum daily burn is uncapped. Now, people don't maybe seem to realize this, but what we mean here is that essentially any amount of ETH can be burned each day. It just obviously depends on the transaction fees. Now, in theory, it's uncapped. In practice, the cap is basically what people are willing to pay for transactions. So, I mean, it can obviously run into the hundreds of millions of dollars of daily fees. It could potentially one day be billions of dollars. I mean, that's thinking real. I mean, and that's kind of crazy, because I would expect that to be spikes in demand, not necessarily sustainable demand. Right now, it's about, I believe, $5 million a day. And at the peak of the bull market, it was averaging like, $50+ million a day. So it was pretty wild, right? But obviously, as we know, the bull market doesn't last forever. It doesn't actually last that long, to be honest, that period of the bull market where everything's going crazy. But yeah, in theory, the daily burn is uncapped. There is no kind of mechanism on the network which basically says, okay, well, we're going to cap the Gwei price at 100, and then no one can bid more than that. That's not how it works. Gwei can go as high as it needs to go to service the network. And then the second point here is that in contrast to the burn being uncapped, daily issuance is capped. So this is, I guess, 99% accurate with 1% nuance. So the reason why I said it's 99% accurate is because it's technically capped at, I guess, each... So it's kind of hard to describe this without getting too technical, but it's capped per slot, I should say. But the thing is that every so often new validators will join the network, which means issuance goes up, which means that daily issuance is not capped. I mean, in theory, it is like capped if all ETH is staked and no more ETH can be staked, but then we create more ETH, which could be staked even though we have the burn, and then it wouldn't net out to exactly zero. So that's why I'm saying it's like 99% correct with 1% nuance here. But for all intents and purposes, it is. I mean, the amount of ETH being issued each day won't increase or decrease, I guess, post withdrawals that much based on the validators joining and not joining, but over longer periods of time it will. But it's much, much less, obviously, and I guess like much more closer to being capped than something like the burn. And then the third point here is that Ethereum is sustainable in a bear market. And I've talked about this a lot on the Refuel already, so I'm not going to rehash my points here. But I mean, we are above the ultrasound barrier in a bear market still. And even in points of last year when the market was even quieter, we were. And as I've said before, the top burners on Ethereum to get us above the ultrasound barrier are all the apps that aren't Ponzi's or kind of like flash in the pan apps or NFT mints or anything like that. They're actually sustainable things. And you can actually go to the Ultrasound Money website and check that out for yourself, which I'll show in a second, actually. I just want to go through the fourth point here, and that is Ethereum is ultra profitable in a bull market. So the funny thing is that the merge came in September of 2022, pretty much like 9 months after the bull market had ended, in one of the quietest periods, or pretty much almost the most quiet period, I would say, of crypto over the last few years. So what happens when the bull market comes back like it did in 2021? And what happens to the burn then? Like, what happens to the amount of ETH that's in circulation? Like, how net deflationary are we going to get? It's going to be quite wild, because for most of the burn's life, it was actually under proof of work still. The burn went live August 2021, and then there was 13 months of burn in a proof of work world, where, as we know, proof of work Ethereum issued a lot more ETH than proof of stake Ethereum does, and that was the bull market there. So let's see what it looks like when the bull market returns. It's going to be very, very crazy. I reckon we're going to get to like net hundreds of thousands of negative deflationary ETH, and then potentially millions. So basically, so let's just say it's a million net deflationary ETH. Basically, it means we've burned a million more than we've issued in the time period that you kind of look at there, right? So looking at the Ultrasound Money website, we can actually see that we're currently in deflationary territory since the merge. And I've discussed before how you can take whatever time frame you want and paint whatever narrative you want. I think it really only makes sense to take two time frames in terms of the longer term time frame. So since merge and since ERP 1559 went live. I'm more partial to since 1559 went live, but some people prefer since merge more, and some people prefer just looking at, I guess, like a 12-month period or a 6-month period. But to me, I like to look at since 1559 went live. Even though it was under proof of work Ethereum, it still makes a lot of sense to me to look at it like that. So if we do that, if we do all time here, so I scroll down here, if I click all time, you can see, well, it won't show it here because this is only tracking the merge, but you can see the all-time kind of, where is it? Down here, the all-time burn. So we've burned 2.87 million ETH over 547 days. So that's since 1559 went live, and we've offset issuance pretty massively by doing that. And then you can also see that even over that longer period of time, most of the apps here that have been burning ETH are the sustainable ones. ETH transfers, OpenSea, Uniswap, Tether. The only thing that was, I guess, like a big flash in the pan was the other deed, or the other side NFT mint, as part of the Bored Ape Yacht Club ecosystem, and that burned 56,000 ETH, but that was like very short-lived, right? So if we go to the last 30 days, you're going to see all of the same apps here, but you won't see other deed. So yeah, you can see here that pretty much all the same apps show up, right? OpenSea, ETH transfers, Uniswap, Tether, and a few newer ones as well, like Blur. There is Zentorrent as well, which I don't know if it's a Ponzi or anything like that, but that's showing up still too. But again, this is only over the last 30 days. It's not like 6 months or 12 months or anything like that, which I'd love the Ultrasound Money website to actually add here. But yeah, anyway, I'm not going to go through the whole website again because I've gone through it plenty of times for you guys. But just before I finish up the discussion here, I wanted to give a quick reminder to people that the KZG ceremony is still ongoing. So if you haven't participated yet, be sure to do so. You still have 38 days left, and we're at over 31,000 contributions so far, which is absolutely awesome. Like, and there's still 3,600 participants in the lobby at time of recording here. So we've made a lot of progress on getting as many participants as possible into this thing. Obviously, it depends on the quality of the participants and quality of the contributions, and it depends on how many people are trying to farm an airdrop, even though it makes no sense that there'd be an airdrop. Just, I don't know. I mean, fair enough if people want to farm an airdrop, and I've discussed this before, where I basically said that's actually a net positive if people think they're going to get an airdrop out of it, because it means we get more contributions. But yeah, if you haven't contributed yet, you still have 38 days left, and you can go visit the website. I'm pretty sure they've ironed out a lot of the initial issues that they had, so you should have better luck of getting your contribution in if you failed in the past. All right, moving on. So Chris Hager from the Flashbots team has some exciting news for us today that RelayScan.io, which is the powerful tool for monitoring Ethereum MEV boost relays, is now open source. So I've gone over this tool before, and you can I've shown this tool to you guys before, and what it kind of tracks here. And how it tracks builders and relayers, not just the relays themselves. And as I said, this is now open source, so that's why I'm highlighting it again today. So if we go to the last 7 days and see what's been happening here in terms of percentage of blocks for relays and builders, you can see that under relay, they actually call it payloads because they're tracking the builder payloads that are being sent over. And then for builders, they're tracking blocks. So the amount of blocks that these builders are building. And it seems a lot more, I guess, like, it's very different depending on what you're looking at. You can see here the top 3 builders basically are neck and neck at between 10 and 11,000 blocks. Whereas the relays, in terms of payloads, are not so neck and neck. Whereas Flashbots still dominates with 28,000 payloads, or 58% share, whereas Blockstrat Max Profit is coming in second place with 7,000 or 14% share. So it's obviously lagging by about almost, I guess, like 4x, or pretty much exactly 4x here, which is fine because these things have been growing anyway. But then as you go further down, there, such as the Block Native Relay, Agnostic Relay, and Ultrasound Money Relay, they're a bit more closer together as well there, which is very cool to see. Now, the fun thing about these builders is that Builder 0x69, so, okay, I should take a step back before I say what the fun thing is here. Builders themselves can also censor things, right? It's not just the relays that can censor the transactions because of OFAC or whatever. Builders can do it as well. So that's why both relayer and builder, I guess, like decentralization or distribution is very important here. Now, Builder 0x69, as far as I know, does not censor because they also have a non-censoring relay that they have. Illuminate, Democratize, Distribute, I don't believe censors. Beaverbuild.org, I don't believe censors. But the thing is that even if you're only supporting non-censoring relayers, at least this is from my understanding, even if your validators are only running non-censoring relayers, you could still have a block that you propose that has a bundle from a builder that has censored in their block. So while the relay won't censor it, the builder will. At least that's my understanding of how that works there. Now, I believe there are a lot less builders that censor as opposed to relayers. And as you can see, the builder, I guess, guess, distribution is a lot better than the relay distribution, at least right now. And I guess builders slash they're also known as searchers are obviously very specialized roles, and a lot of them are actually anonymous too. A lot of them don't really want to reveal themselves for one reason or another. But this site does a really great job of tracking all of that. And as I said, it is now open source. You can go check that out for yourself. And it's funny, a few of the blocks that I've actually proposed as part of my mini pools have had builder payloads come from beaverbuild.org, and I'm only supporting non-censored relays on my mini pools here. But it doesn't mean that Beaverbuild can't censor transactions as part of their payloads or part of their blocks anyway. But anyway, you can go check this out. I'll link it in the YouTube description below. All right, so Connext's Amarok upgrade is now live. Now, I talked about this the other day briefly, and I've talked about it, I guess, a few months ago about how this was coming, but essentially it is now live on mainnet. Now, the cool thing about this, and I had someone highlight this for me that they wanted me to cover this, is that with this upgrade, this actually makes Connext an application-specific optimistic rollup, and one that's specifically designed for to synchronize the state of other rollups. Now, this is really cool because I think this is the first bridge to do this. And I should disclose here, I'm an investor in Connext, but I think this is the first bridge to do something like this and to make a solution like this. Now, Connext is being built by Ethereum OGs that have been working on bridging / scaling infrastructure for quite a while now. So I'm not surprised that they've been able to create something as cool as this and as interesting as this. And I'm just really happy that it's now finally live on mainnet, obviously. And there's a very long Twitter thread here along with a blog post that explains all of this, but the fact that they've been able to create an optimistic rollup essentially for a bridge here is really, really cool. Now, you can actually see here what the Connext's modular architecture looks like. So they're taking on board that modular architecture that we're going to be working with generally for the Ethereum ecosystem, as a whole here, and they've got like a few explainers here of how this works and a few graphics. I mean, the tweet thread's way too long for me to read through. It's 27 tweets here, I believe, along with the blog post. But if you are at all interested in bridges, in rollups, in how Connext is using optimistic rollup technology to power their bridge, you should definitely go check out the thread and the blog post, which of course I'll link in the YouTube description below. And if you want to try out their bridge, you can, with the Amarok upgrade live, obviously. You can go to bridge.connext.network and check it out for yourself by obviously connecting your wallet and things like that as well there. So yeah, I will leave this linked in the YouTube description for you to check out. All right, so Fire has a great little tweet thread out today, basically describing how to analyze a transaction using Etherscan. Now, a lot of you may be confused when you go to Etherscan and see there's so much information thrown at you when you go to a transaction or a transaction hash and see all these different information. You have no idea what's going on there, and you can be forgiven for that because it is quite complicated. I mean, it took me a while to actually learn what all of the things meant, and I wouldn't say I'm an expert on it. I can't necessarily read contracts, I can't read state changes, things like that, but I can do enough to analyze the things that I want to analyze. But in this tweet thread, Fire goes through exactly what is Etherscan, what is a transaction hash, what is a block, and what are block confirmations. And whether you know these terms or not, you can further your knowledge of all of this with this tweet thread from Fire. So just wanted to highlight this for you guys to go check out. I'll of course link this in the YouTube description below. All right, so a pretty big announcement / I guess like bit of news that I came across on Twitter from Sebastian here. So I've been talking about real world assets a bunch on both the Refuel and Twitter over the last few months, and MakerDAO, where Sebastian is actually a community member of and actually does a lot of work for them, have been at the forefront of bringing these kind of real world assets on chain. But there are other projects out there doing this as well. So Sebastian, in his Twitter thread here, starts off by saying, permissionless tokenized securities are here thanks to backed finance. So this is what's called, well, the token name is BCSPX, which is now tradable on Uniswap, but obviously it might get kicked out from the UI because it is a security. So if the official Uniswap front end censors it on the UI, you can just use all the other ones. But basically what this is that what this token is, it's a wrapper on top of something called the CSPX, which is the SPX or S&P 500 ETF issued by BlackRock, and you can read the legal documentation for yourself as well at backedassets.finance and make an opinion for yourself if you want to use this. And the structure of how this works is detailed here. As you can see, it's quite complex. And I remember talking about this with real world assets, in that to make a real world asset work and to make it work in a legally compliant way and in a way that people can trust it on chain takes a lot of this just like meat space stuff that goes on. So you can see here that there is an issuer at the center, but then you have a custodian, you have a security agent, you have a tokenizer, you have a bunch of other kind of clients like retail investors and professional investors. You have all these different parties that kind of play into this, and it gets kind of complicated quite quickly. And then ultimately, your only claim on this sort of stuff is the IOU that you have, because obviously it's not the real asset, so to speak. It's an IOU of the asset. And then if you want to redeem it from the source, you might not even be able to do that. But if you were, you'd have to go through all these steps to do it. And you definitely have to KYC. You would definitely have to complete AML checks and all that sorts of stuff. But the point is that we're bringing these, I guess, like assets on chain, and we're figuring out ways to do it. Now, things will hopefully be simplified over time. A lot of them have to do with existing regulatory and legal frameworks, which hopefully over the years, I mean, it's going to be slow moving, but hopefully over the years will be updated to reflect the efficiencies that blockchain brings to all these sorts of stuff. But for the time being, we have to deal with this. In saying all of that, I think it's still a very positive thing that we have this live and tradable on Uniswap right now, because as I've said before, the real world assets trend is going to heat up very, very quickly. We already have obviously tons of USD stablecoins and other fiat stablecoins on chain right now. They're quite popular, but they're not the only. I mean, they're far from the only real world asset that will be brought on chain. But if you're not interested in this, if you're only interested in native assets to crypto networks or digitally native assets, that's totally fine as well. But I think that it depends on your mindset too. Like for me, for the longest time, I've been completely disinterested in owning any kind of stocks or any kind of like real estate. I personally want to keep pretty much all of my capital, or all of my free capital besides my primary residence, in crypto. And I've made that conscious decision because I believe that crypto still has a ton of growth left. It's where I have the edge as an investor. I have no edge in the stock market for sure, and I have no edge in property investing. And also I'm still I am more in the wealth preservation stage than I have been in the past, but I'm still in wealth accumulation mindset as well. I still want to be part of the wealth generation that this ecosystem, that I believe this ecosystem is going to generate, especially over the next 5 to 10 years for pretty much everyone that's invested in it. Well, people that are invested in the quote-unquote right things, and what that is anyone's guess. But I have been thinking about, okay, well, what's it going to look like in 5 to 10 years, where I believe that I either no longer have an edge in crypto because the market has matured, it's gotten really noisy, it's very hard for me to find opportunities, or where I've got, so much capital that I would rather not risk that capital in crypto, and I'd rather put it into maybe some stocks, or maybe a stock index, or maybe some property. Obviously, I want to have a substantial portion of my portfolio always in ETH, but as you guys know, I'm never selling my ETH, and not even my kind of like staking rewards. So if I could go and buy an investment property or stocks in order to generate passive income from that via dividends or rent, that would be really cool. And obviously everyone's situation is different. But the point I'm trying to make here is that if I was able to do this on chain, I would be much more inclined to do it, because I dread having to go through the traditional finance system to buy anything, right? To buy any of these stocks, to do anything like that. I dread it. I dread the slow processes. I dread the fees. I dread the fact that I won't be able to essentially do with the assets what I want. It basically just sits there. Actually, what I dread the most is the inefficiencies of it coming from crypto and going into TradFi. It hurts, guys. Like, it really hurts. I had to do a wire transfer, my first one in a long time. And I believe I mentioned this on the refuel when I did it. It took like a week. I had no confirmation that the money had been transferred into the desired account. I actually had to ask the person, hey, had the money come across, right? And then, it took a week, right? And this was obviously an overseas wire transfer. I'm in Australia. It went to, I'm not going to name the exact country, but it went to somewhere in Europe. But to do that on chain, right? Actually in the wire, it involved a lot of fees because I had to go from AUD to the target currency there. But to do this on chain, all I would have to do was I'd go from my Australian dollar centralized exchange. I'd buy USDC, right? I transfer that to my Ethereum wallet, and then I transfer that to their Ethereum wallet, and this is all done within 5 to 10 minutes. And now I have full auditability of that entire flow. And I've gone through this before, so I'm not going to rehash it now, but I have full auditability of that entire flow, and I can actually check for myself to see if the transaction has been confirmed. Now, if I was just doing it all on chain, I could potentially have my transaction confirmed, and much of the time I will have my transaction confirmed in one Ethereum block, which is 12 seconds. So 12 seconds with full auditability, traceability, as opposed to 1 week. Like, it's actually ridiculous how stupidly more efficient that is. And the best analogy I can think of, or the best kind of like example I can think of what else we've seen this happen in, is obviously communications. So an email is infinitely faster than sending snail mail. If I was to send a letter in snail mail to the other side of the world, it would take probably a week, right? And that's being optimistic. It'd probably take longer than that. An email is pretty much instant to anyone in the world, right? To anywhere in the world. And it doesn't require all of the, I guess, like physical, not infrastructure, but the physical kind of manpower to make that work. Obviously, there's a lot of infrastructure that exists for the internet that requires maintenance, all that stuff. But the costs are just collapsed there, and the speed of communication is absolutely collapsed. So crypto and blockchains generally are doing what the internet did for communications, but for finance instead. And these real-world assets are definitely coming on chain. They're going to be a big theme over the next few years, and it's going to encourage more and more people to buy these assets, to play around with these assets, to get invested with them, and it's going to increase the overall efficiency of the traditional economy as well as the digitally native one there. But anyway, going to move on from that one. Just wanted to highlight that for you guys. I'll link Sebastian's Twitter thread in the YouTube description below if you want to learn more about that. All right, so we have a big update from Metamask today. So they started off this Twitter thread by saying, starting today, extension users will see an updated experience when creating a new wallet, as well as an update in their privacy and security settings. So their update is when creating a new wallet, users can click on Set Advanced Privacy Settings to change their RPC providers and toggle features that send requests to third-party services that help with phishing detection and identifying incoming transactions, among others. So this has been something that Metamask has come under scrutiny for, basically tracking people's IPs and using obviously the RPC and tracking what they're doing transaction-wise and tracking what they're doing with the different sites they're interacting with. But basically, you can now configure this. You can add your own custom IPFS gateway. You can obviously change your default RPC here and turn off these advanced features if you don't want them, which is very cool to see out of MetaMask. And the Twitter thread explains some more of this, but it's not a long Twitter thread here. But great to see that they've taken community feedback on board and implemented this, because it was definitely a massive cause of concern from the community, and it probably definitely made people switch over from MetaMask to something else. Even though I don't believe there are actually that many great privacy-preserving alternatives right now to MetaMask. There is frame.sh, which is pretty good, but I haven't used that actually in a little while. I used it a while ago, and there were some bugs with it, but maybe I should give it another go. But I've heard from other people that it's still quite good, and it protects your privacy, and you can obviously use it with your own full node and things like that as well. But I just wanted to highlight this from MetaMask because credit where it's due when it comes to these sorts of things. So thank you, MetaMask, for putting these features out there. All right, last couple of things here, just a couple of shout outs. So Patrick McCory has put together a resource here titled How Ethereum Proof of Stake Works. And over the course of the next 2 weeks, they're going to be publishing, I guess, like articles and updating these links. And this was actually published on January 13th, this original blog post. And I originally, I think, covered it on the Refuel, but it's been updated with a lot of different blog posts now. So there are only 2 blog posts left to publish on sway attacks and sync committees, but the rest of them have been published. And you can find links to them in this blog post, which I'll link in the YouTube description below. But if you're interested in diving deep into how Ethereum Proof of Stake works, well, this is your resource. This is a very easy to understand resource. It is not too technical. It comes from Patrick McCory, who is at the forefront of these things. So you should definitely go check this out. I'll link it in the YouTube description below. But that's it for that one. And last up here was just a podcast from the Zero Knowledge podcast. They recorded with Trent Van Epps and Carl here, all about the KZG ceremony and proto-dank sharding / EIP 4844. So you can go listen to this podcast. I'll link it in the YouTube description below. But that's going to be it for today. So thank everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all next week. Thanks, everyone.